Hi, I'm Greg Schnell, and I am here today to discuss scans to help you stay nimble. And what does that mean? One of the things we see in the market all the time is a lot of rotation, and sometimes tech will be in favor, out of favor, gold will be in favor, semiconductors will be in favor. And the idea behind this is as the market changes, you need to be able to change with the tide as it's coming in or going out. So what we want to cover off today is just a couple of different scans, and I'm going to focus on relative strength. I think it's one of the single most important points in analyzing the stock market. So I have taken this from chapter 12, covering the relative strength in my book, Stock Charts for Dummies. Just if you wanted more information after this, you could go there. But we're going to cover off relative strength compared to an index like the S&P 500 or the NASDAQ, or to a sector or to an industry group. And so what does that mean when we say relative strength? Relative strength means something compared to something else. So as an example, are my oil stocks going up faster than my semiconductor stocks? So you're comparing. And if both stocks are going up, which one is going up faster? So the sports analogy is a current ranking of your football team in the standings list, and which one has more wins and fewer losses. That would be one way of ranking them. Well, which team is racking up more points per game is also important, even though they might not have won as many games, but that's still an important stat to keep track of. So we see different types of stats that you could use to try and scan the market, and we have the same thing that we would use in scanning other industries or other methodologies. So on the chart on the screen right now, what we see is this is a chart of the company called Barrick Gold. So it's not gold, the actual metal. They have a ticker symbol gold. But what you see on the left-hand side is the chart is ascending, goes into a big fall, and starts to turn up. And so we can see that the chart or the stock changed character. And what we don't know is how big the pullbacks are going to be. So one of the things that we use in technical analysis is we use it as a tool to help us get into stocks when they're starting to rise and get out of stocks when they're starting to fall. That sounds pretty obvious, but it's not quite as easy as you think. How do you know if these breakdowns up in here, if this first one or if the second one, how do you know if they're not just going to keep going? And so the idea being, we want to try and find some tools. We're not going to be right every time, but we want to try and improve that. And conversely, down at the bottom, how do we know when a new trend is starting? So there's 5 different ways to see relative strength that I usually work with. And again, on these indicators, when they're trending higher, that's positive. So this is a chart of Zoom, and you can see the SCTR ranking up here was really strong and then started to fail. You could use a line chart or an area chart, whatever you prefer. On mine, I always make my ratio or my relative strength chart compared to the S&P 500. I make it in purple and I highlight the top edge. And so that's called an area chart. And what you see here is the stock is declining, or the relative strength is declining compared to the S&P 500. It's underperforming. And we just happen to see the stock is doing the same thing. Now I've compressed everything on the screen here to show you the indicators at the same height as the price. But this price went from 500 and changed down to 270. So pretty big pullback, right? $200 a share. And depending on how you present it on the screen, it can get pretty compressed. But my point would be, compared to its sector, it was underperforming. Compared to its industry group, it's underperforming. On the SCTR ranking, it was one of the top stocks. Then it became one of the weakest ones. And on the relative strength compared to the S&P 500, all of these are trending down. So for somebody who's not a technician, they would say, oh, Zoom is coming back and it's going to be great and all that kind of stuff. What a technician sees is you had a big uptrend in price and in relative strength and outperformance, and that started to change. And when that changes, that can help us time the market. So this is a different stock, and I've tried to pick some stocks that, might not be on your radar or whatever, just to help show the comparison. But this is an oil stock, and you can see it was out of favor. And then it slowly started to improve on each rally with the SCTR ranking. And now everything's up in the top right-hand corner. And so you can see that as this stock starts to improve, you want to try and get on board. But again, the stock changes character. And so what we want to watch for is, how do we find those bases? How do we find the stock turning around down here? And we're going to focus on that today. So it's not about selling today, it's about how to find getting into the stocks. And so that's where I want to focus a little bit of time on. So what do we notice as the stock starts to turn up? What you'll see is that we're typically starting to trend higher, and this scooter ranking on Barrick Gold had been below 10 for a long time, and now all of a sudden is starting to show a little bit of enthusiasm. Relative strength compared to the S&P 500 is now starting to turn up. Price is starting to improve. It's making higher highs and higher lows. Compared to the sector it's in, which is materials, it's trying to make new 3-month highs. And compared to its peer group, it's actually one of the worst performers in the gold group right now. So we can scan for any one of these things. We could look for different things, and you have to decide which one's important. Obviously, if they're all trending up, that's even better. But for us, this is what we're looking for. Now what we want to do is take that and convert that to a scan. So how do we do that? So when I look at the stock, this is zoomed in version, what we can see here is we could scan for something that was over really beaten down, starting to turn up. Or we could scan for new relative strength improvements. And in this case, the stock is, this is like 2.5 months of improvement in strength compared to the S&P 500. So it doesn't take the whole period. It just says, how's it doing? What our scan would do is we would measure back a certain period, and typically 60 trading days is a nice way to look back. And when a stock starts to make new 60-day highs in relative strength compared to its previous performance, that can be helpful. So we're gonna walk through that. And again, price should probably already be starting to improve. That would be helpful. And I can show you on some examples like Apple, how it might have started to turn up before stocks started to bottom. It just wasn't falling as fast as the others were. So sometimes relative strength, both stocks can be falling, but one is falling faster than the other. Okay, so when we want to scan within a sector, there's a couple of things we need to do. First of all, we need to define what the sector is, and we need to define what we're trying to find. So let's just say that we think energy stocks are going up. Well, now we want to start looking for energy stocks that are outperforming. So the way to do that is to remember that price relative is a way of just specifying what we want to compare. So we want to compare to the S&P 500, and we could change this. We could compare it to an industry group, a sector, or a NASDAQ index, or a Russell 2000, an ETF. We could compare it to anything we want. We just have to put that in here. And this will give us exactly 60 days ago. Is it higher or lower compared to the S&P 500? Not in price, but in relative strength. Okay, so what you might find though is that this gives you a large list to work with. So let's just say energy stocks, maybe there's 500 names, and out of those 500 names, all of them have started to outperform. This is going to create a large list to work with. And the example is, we want to try and find the sunny days in Seattle, not the sunny days in Scottsdale. There's just too many in Scottsdale and just a few in Seattle. So we want to work with the scan engine to tighten our scan and make it smaller, so it gives us a manageable number of pieces of information. So we're going to go over to the sector, or over to the scan engine, and I'll show you a couple of things that we want to set up first of all. So first of all, we want to figure out how to get our actual exact name that we're supposed to type in here. How do we find those? And then just remember that this variable you can change. So we're going to go find that on the scan engine right now. So first of all, I've shown a couple of different examples here, but I have it set so group is gold mining and price relative is set for 60 days. Now, let's just say I've got energy sector and technology sector, or I've got a gold mining industry within materials, or I've got semiconductors within technology. But the way you do that is you go down here to the bottom right, and you can see under communication sector, is all of these choices for industry groups. And under the consumer staples, same thing. And so you're literally going to go through, look within the sector you're trying to find, and then pick the industry group you want, or you could just search on the whole sector. And if you're a Canadian and you want to do this on the Canadian market, you would just pick the Canadian dropdown. So it's a pretty easy thing to do, really simple, and it's always going to add this line to the bottom of the scan engine. So whatever we could scan for automobiles, doesn't matter. Up here, it's going to put it in here. Now obviously you can't be in gold mining and be in automobiles at the same time. So the way we set up the scan engine to only focus on what we want to scan on is we would just put 2 slashes to say that this is a comment, not an active part of the scan. And what we see here is, so now it would scan for gold mining and this percent relative. And I'm just using these for examples, but you could stop this one and start energy and do the same thing. Okay, so we're gonna take this and we get it down to here. We're just gonna say run the scan, and it comes up with a whole bunch, 48, pretty large number. So we could filter out by a whole bunch of different things. One could be price. One could be it has to have a scooter ranking. One it could be that you don't want anything that's over the counter. So a whole bunch of different types of results we get. But when we get them, in order to quickly look at them, we would just replace an existing chart list. So for me, what I would do is I have a whole bunch named, and we're searching for gold here, so we're going to call it scanning dire straits or whatever. We're going to put it in the dire straits chart list, and you can have some fun with this. It doesn't have to be all serious. So now we have a scan, and we got a whole bunch of answers. Well, the nice part, once you put them into a chart list, you can quickly highlight them and see if there's charts that you particularly like as you go down here. So here's one, and it's K92 mining, and it's breaking out to new highs here. So that looks pretty bullish. And here's Mux. It's been down and out for a while, and it's starting to take off. But maybe you don't like low price stocks. So here's Franco Nevada, and you can see it's starting to run pretty good. Or Agnico Eagle. As you look at the charts, you can get an idea what you want. Now, the whole gold sector has started to outperform, but one of the problems we have is we're getting a pretty long list. So what we probably want to know, there's 2 different ways to think about it. Maybe I want stocks that were underperforming compared to the S&P 500 60 days ago and are now outperforming. So by adding limiters like this last line, it just says, and 10 days ago, this was underperforming, and now it's outperforming. So we can get that change. And when we go back and we run that scan, we would literally just take our scan page and we would highlight that. So we would add this into the scan. And so it says, and 10 days ago, this was underperforming the S&P 500. So we run that. So we had 48 before, and now we have 30. So that's an example of a way to limit it. Now we could use price or anything else. But the idea being, get focused on what you want to look at and start to run a scan. So if you ask for anything outperforming the S&P 500, you could get 2,000 stocks based on a specific date. Or you could say, that's too big. So I want to know only stocks above $10 that are outperforming the S&P 500. Try to limit your scan to get it down to something that's usable. So if you like to work with low price stocks, then you would put in a ceiling for the price. If you only like to work with big, large caps or volume related, you want something very liquid, then you can use that in your scan. Okay, so let's go back and talk about a couple of different things. So I focused on just how to use that relative strength chart, and I'll show you some examples of why that's important in a second. But you can also do that same thing rather than just scanning within a sector. You can go into the industry group, and by changing it to just the group instead of the word sector. So again, if I go back here, this was energy sector, and this is gold mining. It's all the same. It's that same part of the scan engine down in the bottom right-hand corner, and you just have to decide if you want to scan or sorry, if you want a sector or an industry group. And again, we're not trying to find the Sasquatch here. We're not looking for one specific stock to pop up. We're looking for kind of a group of stocks to start to show us what we want to find. So I mentioned earlier that we have the StockCharts technical ranking, and for me, it's one of the most important things to look at. And why is it so important? When you have all of the indicators on a stock typically tell you how it's doing compared to itself. So the RSI or the MACD or the PPO or the advanced decline line or the on balance volume is all about the stock itself. What the stock charts technical ranking does is it makes it more like a sports ranking. And so you actually get to find out which stocks are at the top of the league and which stocks are not. And so what I like to look for when I'm scanning is I either want stocks that were very underperforming, like that gold chart, and starting to turn up, or stocks that were average that are starting to outperform. So the good news is this is the dream, right? You get to pick which team you're on. And so if we were to play football, wouldn't it be nice to play on Tom Brady's team? I mean, you'd be 7 Super Bowls later. Well, when he was at New England, he was a winner, and his SCTR ranking would be greater than 75. And it's the kind of thing that you would look for of a strong um, stock or a strong team member to keep winning. And then he went to Tampa, which had never been a winner. Its stock charts technical ranking would always be less than 25. But when Tampa started winning, it started to improve. And so your scooter ranking would go from it crossed above 25, crosses above 50, crosses above 75. All of those things are clues that it's getting better. So when we do that for stocks, we have this problem. And there's a big bucket of stocks out there, right? There's 8,000 of them. So how do we find any real edge? And I'll give you an example. When the stock just goes sideways between 25 and 75, it's not really outperforming. So let's go look. I have one stock here. This is Royal Bank. RBC, they advertise on a lot of the sleeves of golfers like Dustin Johnson and that kind of thing. But here's the scooter ranking. Basically, it's just in line with its peers. It's roughly 50%. Few days it's better than its peers, few days it's worse than its peers, but for the most part, it's average. Now, the relative strength shows it improving quite a bit, but this scale will change based on how big the outperformance is. So even if this stock was just performing 0.001 better than the S&P 500, it would keep showing an uptrend as the stock marginally improves. Now, the scale on the side isn't moving very fast, right? Bitcoin moves $10,000 a day, and this stock over a 1-year period is moving, $30 or something. So the scale gets adjusted on all of these things. And the one thing that happens on the scooter ranking is it's comparing it to its peers. It's saying you're better than 77%, 79% of the stocks out there right now. So now you know it's in the top quartile. So I draw a blue line across my scooter ranking indicator to say, what's top quartile, and once it gets up there, that's pretty important. So we can see that the stock has been generally in line with the S&P 500, marginally outperforming. This makes it look pretty big, but when we know that we have the scooter ranking there, scooter ranking says it's just barely above average, so no real change here. All of a sudden it's starting to be above 75. So this gives us a little better clue. Now, don't get me wrong, this is still an uptrend, but the thing is your money could have been the best performer. It could have been in whatever, let's say JP Morgan is outperforming. And when we go look at JP Morgan, maybe the scooter ranking is a little stronger. So let's just do that. So here's Royal, RBC, and now we'll just change it to JP Morgan. And what you'll see is the scooter ranking has been pinned up at the top, not much better than 75, but still better than RBC. And so it's moving up a little bit faster. So this can help you find what's outperforming. So not just is the relative strength trending up, but is it really outperforming? And in this case, it's going to be compared to its large cap peers. And the way we would know that is we would turn on the full quote box. and it identifies that your scooter ranking is in a large cap group. And right now, JP Morgan's better than 81% of them. Royal Bank's better than 79. So they're not much faster. But back in here, JP Morgan was performing better than Royal Bank. So it's actually had a better uptrend. Hopefully that makes sense. Okay, so let's go back and look at the different types of things I like to watch for. So stocks that are trending down with a weak scooter ranking, you want to avoid. And at the time of writing, we could use an example like Tesla. It was really strong, or Zoom, it was really strong, or Peloton, and then it starts to trend down. And as they trend down, we probably want to avoid them. So stocks start to improve. The scooter ranking moves above 25. That's one of my favorite trades. And especially if you like commodities, commodities are buy and sold, not buy and hold. You buy them, they run up. You sell them, they fall down. You buy them, they run up. You sell them, they fall down. And you need to make sure you're on the right side of that wave. Um, you can have technology stocks that will run for years and then all of a sudden give it up, and they'll fall, and they might spend 2 years underperforming. So the trick is to try and be aware of when that trend changes so you can move your money out of that stock and into something else that's continuing to work. So stocks that are pinned above 90 can keep going for a while, and that's a really strong thing to look for. So you could just scan for that. But the trick is, if they've been up there for a year, do you really want to start adding to them now? Probably not. You probably want to find something that just got up there or is starting to get up there. And again, when something that was outperforming stops, that's a clue too. So when the scooter ranking was really strong and all of a sudden starts to fall, we have to decide, is that a real long-term change? Is that something I want to exit? And historically, when you're in a winning stock, you don't want to leave. And so it's very difficult to pull the trigger on your biggest winner. It's always nice to talk about at the coffee shop that you had the best, strongest stock for a whole year. The problem is if you ride it all the way down after it was the best, strongest stock and it's now the weakest, it's not as much fun. So how do we sell near the top? And you can get that from scanning as well, but it's also graphically displayed. So what we want to focus on is on stocks starting to improve or stocks breaking out of boring. So here, again, Royal Bank just average and is starting to improve. So if you wanted to find something moving above 75, then this might show up on your scan engine. And again, we see how a stock can change character. So what we want to know is down here at the bottom, what are the traits? And I showed you on this Barrick Gold chart before, that as it starts to turn the corner, we start to see some information change on the indicators. So here's a picture of Apple, and you can see it was outperforming, underperforming. That went on for 6 or 7 months. In the meantime, it went from $56 to 34. And then for the most part, Apple started to improve in StockChart technical ranking, moved above 25, which is kind of one of my favorites when it goes from underperforming to turning up. And then it actually made a very hard pullback for a month. And in here, the market must have been oscillating too, because the scooter ranking said it was staying in line with its peers, but obviously it was falling as well. So then it went on a big run and it stayed up there for a year. But then all of a sudden, notice what happens here. I mean, this is a large cap stock that everybody watches. The scooter ranking starts to get weak. So the outperformance it had is starting to weaken. Well, what do we see? We find out that the stock really doesn't have any more gas in the tank, and for the most part from 144 down to 118, and now it's just sitting on its 200-day moving average, and perhaps it's going to start turning up again, and then we would watch for this scooter ranking to start to break out above 25 or 30, and as it starts to head up, then we would get on board. So if we wanted to scan for strong scooters, scooter ranking for, let's say, large cap, and this is mid or small, and you can go look for those same characteristics on the scan. But 5 days ago, it was under 70. So this is just going to tell you how they're changing. And so what we want to do when we go grab that scan, we're going to run it. And again, very simple scan. I'm not doing anything magical here. It gives us a list of 13 stocks. And again, we could save those in whatever, replace an existing chart list. We're going to go in here and we're going to dump it into scanning for Greg. And when we do that, it's going to give us a list of stocks, and then we can just go look at these and see what they're doing. Now, You know, is this a stock you want? You don't really know, but what I have it set up is my scooter ranking is always on my chart. So this was a very strong stock starting to underperform. Not my favorite place to pick it up, but I wouldn't mind looking if my PPO starts to turn up. Perhaps that's a reason to start getting back on board if momentum was going to improve. But typically when something's been up here a long time, that's not really the one I want. The one I'm looking for, let's just go find C, whoops, C. This one was a really strong stock. It's been down for about 3 months now, and it looks like it's starting to turn up, making higher lows. So all of a sudden, perhaps there's reason to start to look back towards this trade. Okay, so very simple scan again. I'm not doing anything magical here. Uh, So now if you were going to do the same thing for weak stocks improving, you're going to hit that same button. And when we do that, we'll go in here, just have your technical scans all set up. And rather than having these two scans run, these two lines of code, we're just going to have the other lines of code run and generate a scan. And while we do that, okay, now we get 16, and most of these are in semiconductors. So all of a sudden, perhaps there's a turn in semiconductors. And again, we would go save those, go take a look at them, but whatever, let's just go look at NVIDIA. Scooter rankings down around 30. We know this is a pretty strong company. It's been underwater for 6 months. If this is going to start to head higher, it's breaking through 500, or sorry, 600. That'd be a pretty nice place to enter the stock again. So we can use those scooter tools to help us find even strong stocks that have pulled back. So here are just some codes that you could use to look for scans on different stocks or different methods, and you can work with them together or apart, but just take some of these lines that are hashtagged out or commented out, and you can use those lines instead. Okay, so I do want to show a couple of quick things here. So here is two relative strength indicators. This is compared to the S&P 500 and the scooter ranking. What you see is the relative strength is starting to break. The scooter ranking is starting to break. That's a pretty good clue to at least be careful. It was very close to the high, and just something simple like that. Using that type of simple information can help you save a lot of money. And back here, we had the same thing, an uptrend in Apple, and all of a sudden it starts to leave and the stock drops 20%. That's newsworthy, and you don't really want to live through that, or you can at least buy an option and protect yourself, shrink your portfolio size or position size. Lots of things you can manage through. Okay, and the last one is just using relative strength would help you avoid some of the biggest drops in the market. So Bitcoin, at the time of this presentation, this is May 20th. So Bitcoin had been running up really, really strong. And back in mid-April, it started to break its upsloping trend line in relative strength. It doesn't have a scooter ranking because it's not a stock. But what you see is prices running up. The relative strength trend line is running up and Bitcoin is outperforming. It starts to underperform. That's a pretty good clue that something that was outperforming is no longer outperforming. Now it's very close to 3-month lows. What you can see is the stock starts to make another little uptrend, or the currency, and starts to break down. As you see this breaking down, you need to be protecting yourself. And in this whole big Bitcoin drop, it was roughly $10,000 in one day. There was 60 some thousand accounts closed with margin calls, and one person got a margin call for $60 million. That's important stuff. So anyway, hopefully you can use relative strength and scooter ranking to help you improve your scan results. Thanks for taking the time to join me. Good luck with your scanning.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.